Today's date is March 31st, 2024. So first of all, I'd like to say Happy Easter, everybody. So what we're going to do is we're going to do a comparison of a 5-year chart of the S&P 500 versus Tesla, and we're going to take a look at the charts to see when is a potential good time to get in the Tesla stock. So let's start with the S&P 500 for a 5-year chart. If we come back to this area right here, this was our COVID crash right here. From that point, we were in a bull market, and then we went into a bear market for 9 months. We came out of that, and in the S&P, we've been in an upward trend. Let's look at that compared to Tesla. Here's the COVID crash of Tesla. This is our bear market that the entire market suffered through. Tesla comes out of the bear market. We come up to this area, but from there, it's been in a downward trend versus the S&P is in an upward trend. Here's our little correction here. The S&P 500 looks really good, and Tesla is struggling a little bit. The challenge that Tesla is going to have going forward is they have a lot of competition now. They're going to have to share their marketplace with a lot of other vehicle companies that are getting into the EVs, which all of them are going there because that's the direction we're heading in unless some new technology comes out. We're going to go back out 3 years and we're going to draw support and resistance levels. If you come up to the high, this is the top. Each candle on this chart is representing a week. When it reaches this area, it bounces. This is now a resistance area. It's going to be resistance here. It proves to be resistance here. It proves to be resistance here. So this is going to be a resistance area going forward. This was resistance at this point. It broke through here. Now this will act as a level of support. As you can see, when it topped out and it came back, this is on a weekly chart. This here looks like it formed an area of resistance. This here is going to be an area of support, which when we come over to here is now going to be resistance. So this is a yearly chart for Tesla. Each candle represents 1 day. The white line is the 10-day moving average. The purple line is the 21-day moving average. The green line is the 50-day moving average. And the red line is the 200-day moving average. These moving averages are very important to pay attention to. Many of the hedge funds, many of the financial institutions, your banks, insurance companies, big money uses these as benchmarks, as well as support and resistance, and also a lot of other tools. We look on this day here, it reached a bottom. It bottomed out at 152.37 on April 27th of 2023. We're going to draw a trend line, established a support area. As you can see, when the stock gets over here a couple of months later, there's a lot of support in this area, and the stock holds the support area and bounces up, but the stock's not done yet. The stock is in a downward trend. We have a series of lower highs and lower lows. The stock market in general is in a bullish phase, but Tesla is heading in the wrong direction. Let's have P for patience. Let's be patient and wait for the setup to present itself. At some point, this should bottom out to where we can get in it, and going forward, I think Tesla's a great company. I think you're going to be fine. The stock has not shown us a setup in order to get in this. I would wait a little bit. You want to see this over here. You have the 10-day is trading above the 21-day, which is trading above the 50-day, which is trading above the 200-day. This is what you want to look for. Over here, we have the 200-day, the 50, the 21-day, and the 10-day is at the very bottom. Very rarely are you going to pick the bottom to get in on a stock, and very rarely are you going to sell at the top when things are turning around, so your portfolio doesn't take a hit. Because here's what can happen. It's very possible that the stock is not done with its correction, and it can easily come down to 152.37. It tried right in this area here. So we have a level of support right here, 152.37. Let's look at 2 years and see what happens. The next level of support is 101.81. That's a lot of pressure. You're going to lose a substantial amount. That's why you never put everything all in on one stock. You don't want to do that for this particular reason. If you have a solid foundation, no debt, your cars are paid, you've got your 401k is maxed out, your Roth IRA is maxed out, you have a life insurance policy, you have a 6-month emergency fund for when the car breaks and tires blow up and life happens. After that foundation, and you want to buy individual stocks, absolutely. Buy all the individual stocks that you want. But no, that has to be a very small percentage of your portfolio, because when these stocks get under pressure, whatever the reason is, they can be the greatest company in the world, your portfolio gets wiped out, and it takes years sometimes to recover. And that will complete our analysis of Tesla. Thank you. Happy Easter. God bless. Have a great day.
I hope this information was helpful for you. Just be careful when trading and investing in the stock market. It's very risky. So always remember to dot your I's, cross your T's, and don't forget the Z. Happy investing.